Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good weekend. Ira Epstein of Linn Associates with your weekend edition of the Financial Market Wrap-Up for this Friday, and this is October 26th, 2018. Now remember, on the weekend edition, we start off with a monthly chart, and then we go to all weekly charts, trying to get to the bigger picture of the market, and Monday through Friday, I do the daily chart. So it gets to be a lot of fun for me looking at the markets the different way. Again, a down day today, and yes, the markets came off the lows big. You were down 131, but if you look at the low, you were at 24,415 and the Dow finishing at 24,746. So you came off that low about 330 points or so, still down. And it just didn't feel like a bottom today. It doesn't have to have a blow-off day, but I'd look for more than we had, and we didn't get anything great in the market. As we take a look at a monthly area chart of just closing prices, you'll notice that we haven't hit the monthly average since this monster run back in 2016. We are in line now to hit it and maybe close at it. Now, intraday hitting it isn't what I'm talking about because you did that. If you take a look at the low for the week, you've got, for the month rather, 26.27 is the low. We were under that, but it's the close. We haven't closed under it. So that's the important thing on a closing chart. When you come to the weekly area chart of closes, not only did you close under it back here, and we can come right here, it began right on this time frame, October 5th. It seems so long ago, October 5th. But if you look the market there and look at the extension of the break once that occurred. And I'm going to come back and remind you, you hadn't been there since the summer months. So you're getting this sizable break. The question is, you're going to make a run for the 2,600 level, the old lows on a closing basis. As we take a look at just a bar chart without the closes, now it's the high-low close on the chart, not just close only. On the way from the top side, you're now down under the old break low of which was 62%, and this is a Fibonacci number, obviously. So I took the low of 25.29 up to the high, and now we're in the retracement level. If we take all this out, then you're not in a Fibonacci area. So the big question is right here, is the Fibonacci working or not? As we take a look at swing lines, my study, they're bearish. You've got lower highs, lower lows. You'd have to take out 28, 24 and a quarter on the current chart formation to negate this bear pattern. When looking at it, then I start looking to see where might the market head. One of the numbers might be 25.75. The 100-day average of closes. The 200 is way down here. If it gets there, you're just in a fabulous bear market route. I don't expect that. That doesn't mean I'm right, but I would look that's one possibility, 25.74. The Bollinger Band is another possibility that it tries to grab here. Now, the market closed today, 26.69, which is under the lower Bollinger Band. So we have a market that's now in that 5 percentile. 5% of the time, a market will close above or below a Bollinger Band. 95% of the time within it. So this route has put itself under there, and that's why somewhere between here and the 100-day is where I'm looking for the support to come in. As you look at momentum, and when I measure momentum on the weekly chart, I don't look for overbought, oversold. I've got momentum down. I call the bias down because you're under the 18-week moving average of closes and the swing line down. In other words, you're still in a full-fledged bear move. When we come to the NASDAQ, it's the same. Lower highs, lower lows. First move under the lower Bollinger Band. The 100-week moving average is back here at 62.80. That's really far away. I mean, really far away. I don't know. 600 points is an awful lot. When I'm looking at the Dow on the weekly basis, I'm staying within the Bollinger Band. So this is a stronger looking chart so far than the other two charts we've seen. Yes, the trend is down. Support might come in at this 24,195 level. And again, the 100-week average is way down under it, bias down, trend down. In the Russell, you keep falling. You get over, try to get over the upper Bollinger Band, you fall back. So we're under the Bollinger Band this week. Last week we were under the Bollinger Band. The week before, if we take a look, we were under the Bollinger Band. And on this particular week, you were under the band. That's 4 weeks in a row. My rule of thumb, and let's remember this, is that you typically don't go more than the 5th. So it could be this week you're number 5 and you bounce after that. But I've already got my horns out that the market's liable to make a try over the lower Bollinger Band. That doesn't mean a bottom yet. It means that the market's overextending. In the VIX, it was interesting today that the market didn't really run further. I think a lot of us have been looking to see, can the market get up and over the last rally high of 28.94. The fact that it hasn't, I know it has a lot of technicians wondering what's going on. The trend is up, though. Higher lows, higher highs. You close back over the upper Bollinger Band, and momentum is up. I'm not saying it can't do that. That's what you're clearly hearing from me. You'd have to come back here under 1706 to tell me the market has run its course to the upside. In the notes, obviously you're getting a bid as people are getting very nervous about what's going on, and you're back down to the 3.1 percentile range in terms of real yields, but you got a higher high, lower low. Now, if you take a look here, this is what I'm talking. When you get and stay under a Bollinger Band, especially on a weekly basis, week after week, the market's telling you a story. It's getting overdone. And I realize in the midst of that, the panic is setting in. Here, we're under. And we come back, close at 118.11, just over the Bollinger Band. Here you're under, but you stay under. That's 1 week. Here, the market comes in, closes underneath the band. That's 2 weeks. Here's your third. So you get to that point, and then all of a sudden the market changes itself. And that's eventually what I'm looking for in the stock market. When, where, I'm not telling you that. Am I bearish right now? Absolutely in the bear camp, not in the bull camp. As we take a look at TLT, it is running the Bollinger Band. It gets under it, gets back over it, comes back to it, gets back the other way. But what is the trend? It is still to the downside. You've got your lower highs, lower lows. Momentum is still bearish in this market. In the dollar index, we saw a bid into the market, but what else do you see on the chart? And you've got to pay attention. Each time we hit this upper Bollinger Band, we have been failing. You make a run, and then all of a sudden you're sideways. I am not saying I am bearish. You're not hearing that at all. I'm just saying you've hit a plateau area here on the way up where the market has to make a decision. Is there another leg in it? If there is, I wouldn't be surprised if the market tries to run from here and maybe get up to the 9,700 level. You're at 96.12 right now. So momentum up, bias up, trend up, into the resistance. Where's the support? The combination of the 100-week average and the 18, take out 94.47, it's like popping the bubble. The market will then just probably spin around right here. It wouldn't be bearish, but it wouldn't be bullish any longer. In the eurocurrency, it's the mirror image the other way. Lower highs, lower lows. You hit the lower Bollinger Band, the momentum's down, the bias is down, and resistance now comes in between 115.56, the 100-week average, to the 18-week average at 116.35. As we step over to the pound, we know that there's big problems going on, and you see it on the chart. The problems are there's no Brexit deal. And Ireland remains a sticking point. With all that's going on in the country right now in America with our stock market retracing, we're not hearing a lot as to what's going on here. But once that settles in, we'll see where we go. There's something else that happened on this chart. If you come right here, right at this week, okay, this was October 19th, a week ago. Where did we get a crossover? Watch, the red line gets under, right through here, and now you start falling, and now you let go. A bearish crossover is when the short-term moving average, in this case the 18-week, gets under the 100. often, not always, results in lower prices. In this case, the next support's 127.36 on the weekly chart. The bias is down since you're under the 18-week. The trend is down. You got lower highs, lower lows, and momentum is down. In the Canadian dollar, even with the Bank of Canada raising interest rates, no bid. Lower highs, lower lows. Not a pretty chart. Bears are in control since you're under the 18-week average. The trend is down as measured by lower highs, lower lows. Momentum down. Next support could be the 75.69. Resistance starts at the 18-week moving average of closes. In the Japanese yen, you've been getting what's called a safe haven bid. When people don't know what to do, they used to buy gold. They're doing it again for a change, but they buy the gold, they buy U.S. Treasury, sometimes the U.S. dollar. The yen has had a rally. Nothing spectacular, though. And that's fairly interesting here. You've got a pattern of higher lows and higher highs with today's rally because last week's high was 90.5, not 0.50, 0.5. That's it, right after those 4 zeros. This week we got through that. So until you take out this week's low, the trend is higher lows, higher highs. The settlement price today at 89.73 was under the 18-week average. That doesn't give it upside bias. You've got a bit of divergence, and we can see the battleground. It is the 100-week and the 18-week. We'll see if the market follows through. What would make it follow through? Obviously, breaking world stock markets. In Bitcoin, their volatility is out of the market. And I was watching today one of the gentlemen that is a pretty good analyst on this. He's still of the opinion we're basing and getting ready for a big move because the institutional investors, according to him, I think it was on CNBC today, Navarrete, if I'm correct, he thinks this is a base area. I can't argue that. The market's just going sideways. It's under the 18-week average. Volatility has come out of the market. When's the last time we saw a week trade in the Bitcoin of $180 or so? It's rare. So that's come out. Is it a maturing market? Don't know. Is he right? I don't know that. You know, if you break out the bottom side of this, he's not right. Then maybe you're going into the 3,000 range. Break out the top side, and I think people will look back at this and say, that was the maturing process. The market recouped from the 20,000 level. In Brent, this is the differential between the Brent and WTI. This coming next week, yeah, the end of next week, I think, is when we're going to see everything on Iran, the sanctions go into place. But I don't know what everything means. There was a lot of talk this week. A lot of people are asking for waivers. Different countries, they're trying to do a deal where they don't use U.S. banks from Europe. I don't know what will work and won't work, but we're going to find out. In the meantime, the differential narrowing a little bit. And we've seen, because of the break in stock markets around the world, people are questioning what is the demand for energy going to be. All I see on the chart is you got up and over the Bollinger Band, and that's why I look at it so often. You fell from 86 back to the 77 level, and the market's trying to hold that level right now. Momentum down, bias up, and we haven't been in a trend as I define higher highs, higher lows for a bit. In WTI, you're trying to make a run for the lower Bollinger Band. So you went from the upper band all the way slipping back, and this week you broke out. No longer in that uptrend. You were here. I am certain that when we were talking at this point, I said, you've now hit an upside target. Got to see what it does, and it failed right there. Now we'll see where we go. Gasoline, it's like never seen anything quite like that, is what people are saying. I'm not. I've seen markets do all kinds of things, but you've got lower highs, lower lows. For 3 weeks, you've had downside bias. Now you hit the 100-week average. If I was going to look at an area where a market starts grabbing for support, it's right now. You're under the Bollinger Band this week, as you can see. Last week you were under the band too, and not here. So I've got 2 weeks under the band. You only stay under the band 5% of the time. You hit a long-term average. We'll see if it can hold there. In the nat gas, the market's just backing off, but the longer-term chart is still friendly. You've got higher lows, higher highs. You were 3 weeks in a row over that band, and now you're pulling back in. And as I'm pointing that out to you, remember what stocks are doing. You don't stay over or under these Bollinger Bands that long. Momentum is still up, but sort of drifting sideways. Big support down here between the 100-week average and the 18-week, and getting there would still not break the uptrend. I want to remind you that I put out a lot of research for you. And what I do is for my research people, what I put out is 2 reports a day minimum, Monday through Thursday. Put one out Friday morning, minimum 1, and then Sunday night. I won't do more than 1 on Sunday unless we had some event take place where it really required it. Then one of the keys I do is this. In the mornings, I come in and I go through 40 charts. And I'm not in the video. I'm recording. I've got another studio that I record in. And I'm giving you trade ideas to set you up for the trade day. I recorded at 8:30. It's in your hands typically before 9 o'clock. And that's when you're starting to race into the market anyways and get you going. So between my 11:30 written update, and I also put out an audio commentary with it, and then I put out one at evening, and most of the time with an audio commentary, and giving you the morning, if you will, trade ideas with the chart there showing you. And in those particular videos, I can say buy and sell. And the reason I can do that, and I can't do them here, is that's password protected, and it's what the government wants. So in these particular videos that you're seeing right now, I can say this is what I think the chart action is. You'll notice I don't say buy or sell here. And when people say that as they write on the YouTube, I crack up because that's not what I do. Where I do it, if you want to criticize me, is get into my research and you'll see what I do there. How do you get it? Call my staff. You can go to our website. You'll see a carousel of free offers. Click it and ask to get into that, or click right up here. Sorry I'm so long, but the markets deserved it this week. Obviously, we're all concerned as to what's going on. I'm Ira Epstein. You have a great weekend. See you Monday.